So after that, I would like to bring George Hames from UK Export Finance here to talk about the new strategy put forward by UK Export Finance. Thank you, George.
Good morning, everyone, and thanks to the CMA for having me. My name is George Hames. I'm here from UK Export Finance. I'm the regional head at UKEF, overseeing our business work across the Americas. I also double hat overseeing the deployment of our new critical minerals supply finance product, which you may be aware of from the announcement in the recent budget by the Chancellor of the Exchequer. I'm here to talk through a bit of how we think that's going to look in practice and what we think that means for securing critical mineral supply chains into the UK moving forward. Now, many of you may be hearing about UKEF for the first time, so I'll give you as whistle-stop a tour as I can in 60 seconds of what UK Export Finance is. UK Export Finance is an integrated department of the UK government. We sit alongside the Department for Business and Trade, sharing their ministers, although we're actually older than them, so you might argue they borrow our ministers. We also act as the UK's export credit agency. We are the oldest export credit agency in the world. Many of the developed countries have some form of equivalent of UKEF. What that effectively means is that UKEF is an organ of the UK government that exists to deploy financing solutions in support of UK exporters, and doing so for the kinds of needs that exporters face financially as a result of their export footprint. That sometimes works in terms of domestic support, where we offer financing directly to the exporters themselves. Exporters may face requirements like performance bonds or bid bonds, working capital shortfall, needing general financial support for export development. But what that also means, and what I spend most of my time doing, is buyer finance, where the UK government can support attractive long-term loans to end buyers of UK goods and services in order to help UK exporters win contracts in overseas markets. That kind of buyer finance offer is something that UKEF has deployed historically in sectors like infrastructure. We've supported high-speed rail projects in Turkey, monorails in Cairo, a theme park in Saudi Arabia, among others, and the renewable energy sector. But it's also the kind of core way that UKEF is now pivoting to meet the government's new aims in the critical minerals sector. UKEF's core function, as I said, is to support UK exporters by offering favourable terms to their buyers. That's the kind of classic mandate, is providing long-term loans guaranteed by the UK government. Any loan that UKEF guarantees, the UK government provides a 100% guarantee onto the loan provided by a lending bank, typically a commercial bank, can be a DFI, can be capital markets. What that guarantee means, it is a 100% guarantee placed by UKEF on behalf of HM Treasury and the UK government. What that means for the lending bank is effectively, if it all goes to hell in a handbasket, if they've backed a project that ends up going into default, or they lend money to a sovereign government that goes into default, what that means for the bank is that in that event, the bank comes to the UK government steps in effectively as an obligor of last resort and makes payments to the bank for the full amount that the bank was expecting on the originally intended loan structure. For the bank, that means effectively they take UK government risk rather than taking the risk of potentially a novel sector with higher technology risk, higher geopolitical risk. And that's where ECAs have been really critical in unlocking finance for emerging sectors such as offshore wind and supporting sectors with kind of critical national interest for that respective ECA. Because banks take UK government risk, that means that banks can offer longer repayment tenors than they might otherwise feel comfortable doing because they're taking UK government risk. It means some banks will enter into sectors which they won't enter into at all without having the security of the UK government guarantee. And ultimately what that translates into for overseas project sponsors is a lower all-in cost of finance. That helps project sponsors to make the difference from having no money to build something and a potential UK supplier to a UK supplier winning a contract and on the back of being able to provide the project sponsor not just financing to pay for the thing it's buying from the UK, but to get a project from idea all the way through to shovel ready. that's the classic mandate. And historically, UKEF has deployed these kind of guarantees in loans where there's a UK export element coming into the underlying project overseas. As of the most recent budget, we now have UK Export Finance's new product, Critical Mineral Supply Finance, which effectively takes this principle that the UK government can underwrite loans to help get projects done by lowering the cost of capital, and deploy it not just in areas where you have an underlying project that's bringing in UK supply chain, which could be goods, services, and tangibles, but also deploying it where that project is critical to the UK's inward domestic supply of critical minerals. So that brings us to Critical Minerals Supply Finance, the kind of newest organ of UK government and one that sits within the remit of UK Export Finance. As a result of this, the UK Export Finance will be able to provide this 100% guarantee to loans given to overseas project sponsors in the critical minerals space where there is an offtake into the UK. That can mean either an offtake of raw critical minerals, if you have, say, a pure greenfield mine in Brazil producing lithium that is shipped directly into the UK. On the back of that offtake agreement, the UK government will now be able to provide financing to help build out that supply chain overseas because it's coming into the UK. But it could also go to whatever the kind of next step before products enter the UK is. So it may be that we're looking at greenfield mining. It may be that we're looking at critical mineral processing facilities overseas. Again, wherever there is a demonstrated link coming into the UK government, through UKEF, will now be able to consider providing these loan guarantees. This will be the case wherever the off-taker meets UKEF's existing eligibility criteria, which means it needs to have some form of export footprint. That exporter eligibility test is deliberately quite flexible and has already allowed UKEF to support inward investment in manufacturing sectors like wind monopile factories or a paper manufacturing plant in North Wales. So it's deliberately quite flexible. And we'll be able to multiply the quantum of financing we can provide over the level of offtake that is coming into the UK over the length of the offtake contract, twice the cumulative value of UK offtake over the lifetime of the UK offtake contract. Besides that, the kind of core principle will remain fundamentally the same in terms of the way that UKEF will step into to guarantee loans, the kinds of lenders we expect to be able to bring in with that, the benefits that conveys both to lenders and to end project sponsors. To that end, any business that I originate is a contingent liability for the UK taxpayer. That's a responsibility that we take very seriously. As such, projects still will need to meet UKEF's existing bankability criteria. We do a credit risk assessment in much the same way as a commercial bank would, except our mandate is to go slightly beyond where commercial banks might be willing to go on a purely commercial basis in order to ensure we're going to bat, historically for UK exporters and now for UK exporters and their associated inward supply chains. That will also apply to kind of environmental and social standards as well. For visual learners, you may find this kind of core structure diagram helpful, which demonstrates UKEF providing a guarantee to a lender. Lender provides loan to support the overseas producer of critical minerals, goods, and services. This loan will always be for some form of build-out that is critical to those goods or services happening. So we'll be looking at greenfield or expansion projects rather than providing pure working capital. Again, to ensure that we're supporting the entry of critical minerals into the supply chain rather than just providing revolving credit facilities to mining companies overseas, and doing so in a way that secures the supply of products to UK exporters within the UK, either of kind of pure critical minerals or associated products. I think the key things to note here are, this is a new government product that is intended to meet a specific policy objective, similar to the objectives that we've spoken about thus far. And as such, it's intended to be as flexible as we can make it, hence the eligibility for, or the ability to look at multiple levels of the critical mineral supply chain into the UK and identify where the financing gap comes into play. We'll follow the UK government's critical minerals list, which mirrors the newly expanded list from the BGS, and provide long-term loans of up to twice the length of the offtake contract, or 22 years, whichever one of those is shorter. As with many budget announcements, there are degrees of this to which it's a work in progress. This is not a product that UKEF has deployed before. There are questions that we are still working through with Treasury, under whom UKEF operates through consent. And there are, bluntly, questions that we may not think of until we actually get test cases coming through our door. And so engagement with you as industry, engagement with UK off-takers and overseas critical minerals producers is going to be really critical for us in working through how we operationalize this product. And we will really welcome any approaches that you give or questions that you bring as we work through how we deploy this to support inward supply chains to the UK. There is a page on gov.uk which will be filled out more over time as the product has been launched, but as we get closer to working through some of the finer details, which we hope will be by the end of the year. You can also get in contact with me as your first point of contact for any kind of questions on how this is operationalized from a business perspective. With that, I'm going to thank you very much. That's not my name. This is what happens when you let someone else write your slides for you. My name is George Hames, george.hames at the same email address. Thank you very much for having me.
Brilliant. Well done. Thank you, George. I remember when we first started talking to UKEF about a year and a half ago, and it's great to see that now in place.